Hi, my name is Deon Rebello, and this is the Bullion Vault. Hi, Willem, how you doing?
Good and you, Deon.
Good. Episode 44, and we're now heading towards the end of this year. Literally, we are now just over 3 weeks to the end of 2025, and what a year when it's with regards to commodities. What a year!
Yeah, especially with regards to bullion. I mean, we've seen gold break all-time highs. We seeing silver right now sitting at almost $60 an ounce, and platinum has also made a massive comeback this year.
Yeah, I think in the overall for precious metals and commodities in general, it's been one hell of a year. It's been a year of absolute growth, and there's a number of fundamentals that has lent to that being happening. A lot of it has been the economic and geopolitical uncertainty, but also from like especially with silver and platinum, it's been driven mainly from industrial demand.
Definitely. I mean, we're going to discuss silver and platinum, I think, in the next episode, and we're
Absolutely.
going to take a look at actually just gold in this one,
Yeah.
because we've seen unprecedented increases. I mean, I remember at the beginning of the year we were looking at forecasts, and it was especially JP Morgan, I think, that forecasted $3,500 for this year, and I think it was reviewed or adjusted about 5 or 6 times throughout the year.
Yeah.
So yeah, I mean, if we look at what gold has done this year, if we're looking at the 1st of January, it closed at $2,623, 2,624 if you take the cents into account. And I was looking earlier today; it's sitting at $4,185 an ounce, which means it's up by $1,558 year to date.
That is phenomenal. If you think of where the price of gold had been for a large period of time, and it sat around that $1,500 mark for a very long time, and now suddenly it actually grew in that amount in one year. I also drew out all the monthly figures on gold and the projection where it peaked and what it started, and then also the average. And I remember when we sat down in January and we said, okay, crystal ball, forecast 2025. And I think if I remember, we both were there was a realization that we were going to break $3,000. I mean, we were kind of there already. We were sitting, as you mentioned, $2,600. We had peaked in January already at 2,800, and there was a pullback. So we said three, and I think I was even bullish enough to say about three and a half. Because if you see the pattern of gold growth prior to this year, it was consistently moving upward, but not in big jumps as it did this year. And as you said, I mean, what's interesting is a lot of the companies such as a Goldman Sachs and JP Morgan's and a number of the others, they all had said they need to, continue to revise their forecast within the year to say, did we say 3,500? Oh, we actually meant 4,200, and so on. So it's quite interesting how the year has gone. It's been very strong. Currently sitting on just short of $2,400, or as we speaking, it's probably gone over that, but it's there and thereabout. And I do see that there's a number of interesting characteristics or reasons why we've had such a strong gold price this year.
Yeah, I think you meant 4,200 instead of 2,400 there. Just
That's
to be clear, just
yes.
to be
Sorry,
clear.
my apologies. 4,200 was exactly what I was meaning.
Yeah, and I mean we saw an all-time high of $4,381.58 in October. I mean that's absolutely crazy, especially if you think that the best and brightest minds in the business wasn't even close. And yeah, it just speaks to where we are actually in terms of the world in general. I mean, there's a number of drivers that are pushing have been pushing this for 2025, and I've just drawn up a few bullet points on those. Firstly, the safe haven demand. We all know that gold has been a safe haven asset for as long as people have been trading, as long as there's been money. And we've got ongoing global conflicts, we've got Ukraine, we've got the Middle East, there's trade wars, we've got political instability, and that has increased the appetite for gold as a safe haven demand. It's just all of your sort of your not only your wealthy individuals, but your investment houses, your Goldman Sachs, JP Morgan, all of those have been buying gold, and even central banks have been investing in gold. We've seen record buying from China, from Europe, basically all over the world. Central banks have been buying gold.
And also, I think we also need to mention, and what's quite important, was the reclassification of gold as from a tier three asset to a tier one asset with regards to Basel III. Again, just that alone has elevated gold status as not a fringe investment product anymore. And as you said, the mainstream have taken it up. But that's part of the story. The big story, and they continue to buy throughout this anyway, has been the reserve banks. And they've bought at an insatiable capacity and demand over the last year, probably the last 18 months, where the demand has just not been met and the need for gold has just continued to grow.
And a big part of this, and I'm going to start this off by saying, it's not that we don't like the USA. It's not that we hate the USA. It's just that they are such a prominent figure in global economics that if they sneeze, the world gets a cold. It's as simple as
Well,
that.
it's a fact, and it's not bashing. I think it's important. There's a lot of challenge. The dollar has been the reserve currency globally, and US economy has been the most dominant economy for many, many decades.
Definitely. And, as I mentioned earlier, political, ongoing global conflict and political instability throughout the world. And the USA has shown how easy it is to weaponize that fact, the
Oh, yeah.
fact that they are the global reserve currency. Let's cut off Russia in an instant. And I think there's a lot of countries that have looked at that and said, but hang on, hang on, hang on. No one country should have that amount of power over another country's financial.
Sovereignty.
Yeah, and so basically what's happening is the US dollar has been they're sort of diversifying into gold so that most of their holdings isn't just based on the US dollar.
Yeah, and again, this by no means is any form of bashing the US. I think, with the change of administration, has brought a whole different appetite for foreign policy. Regardless if you support the Democrats or the Republicans, they have very clear different foreign policies, and the one is more inclusive, and the other is more America and me. And of course, that has sometimes a bit of a bitter taste in the mouth of the rest of the world, saying, the world is beyond America. And I think that has been playing into a lot of the movement of gold over this last year, where you look at how BRICS, and BRICS is Brazil, Russia, India, China, and of course South Africa, and there's now a number of nations that have actually joined the BRICS group because they need a voice. Because the world has been controlled by the G8, it's been expanded to the G20, but it's still the real thing is between the G8, where they control the economic power of the world.
And of course, with the change in the, I don't want to call it regime, with a change of leadership in the US, there's also been a change in monetary policy. I mean, we've seen the Federal Reserve cutting interest rates, which makes non-yielding assets like gold a lot more attractive to investors. And it lowers the opportunity costs, so it boosts gold's appeal. And actually, there's another thing that we need to look at, and that is the fact that the US dollar hasn't been doing well this year.
Yeah, I actually looked today, and I mean, it's the rand is sitting around 17 rand and 1 cent when I last looked to the dollar. When we looked at it last week, it was around 17.15. So it's been the strengthening of the rand, and again, we always say this is the strengthening of the rand has less to do with our economy and more to do with the weakness of the global dollar.
Yes, I also looked into that. Funnily enough, it was 1704 when I looked. I think I might have looked a little
So
earlier or
I got
later to
an
you
extra three
than
cents
you.
out of that. Yes.
There we go. But I actually had a bit more of a look at that, and to start off, 1st of Jan this year, we were looking at 1884 to
Yeah.
the dollar.
Yeah.
Right now, we're sitting at seven. I'm gonna go with my 1704 because
That's
that's
fine.
what I work
You can
with.
hold the 1704. A few cents between us makes no difference.
Definitely. So when I looked, it was 1704, and that's a strengthening of 9.55% year to date for the South African rand. And it's actually quite interesting because then I looked at the US dollar and what has the US dollar actually done. So firstly, let's compare it to a bit more of a prominent um, currency, and the US dollar is weakened 6.62% against the British pound to date.
I was going to say, if you wanted to compare it, probably its strongest comparison would be the pound. Absolutely.
And then also the US dollar index, or the Dixie
Yes.
it's informally called, is down 8.92% year to date. So that actually almost correlates with a increase in the rand, which shows that the rand has indeed strengthened a little bit.
Yeah.
But a big part of it is that the dollar is actually down.
Yeah, and again, with those percentages, you're actually showing exactly that point. Is it's not necessarily the rand strengthening, it's the dollar weakening that has caused that rand to be that little bit stronger.
Definitely. And I mean, so that also plays a big part, firstly, in the price of gold, because we do denominate it in US dollars. We're talking about 4,200 US dollars and not 72,000 rands as such. Um, and definitely the monetary policy shifts, the weaker dollar, safe haven demand, central bank purchases, and then just basic supply and demand dynamics. As we know, gold is a limited commodity.
Yeah.
There's only so much of it that can be mined, there's only so much of it available, and that is essentially what gives it a part of its value. I mean, I, I always laugh when these people talk about asteroid mining and, oh, this asteroid contains this many thousand tons of gold and it's enough to make everybody on Earth a trillionaire. And if they do bring it here and mine it, gold is basically going to be worth less than, I don't know, copper.
Well, I'm smiling because a country just north of us, in their currency, I am a trillionaire a couple of times over, due to currency massive hyperinflation and devaluation. So yes, I think what strengthens gold, and that's the case in point of what you're really raising here, is it's finite. There isn't an infinite supply of it. And that's probably what also lures its strength, is because it is finite. Whereas we look at currencies, and we've seen the complete devaluation of currencies. I mean, I saw, and I actually sent it to you, I think during the week, where we looked at the devaluation of the dollar in its actual buying power over the last century, and what a dollar would buy you 100 years ago to what a dollar would buy you now. And literally now, you're lucky if you can get a packet of gums for $1 right now versus what you would have bought 50 to 80, 100 years ago.
I read that, yes, and it was actually a very good representation of what the dollar is actually worth. I can't remember exactly what you could buy 100 years ago or something like that. But yeah, it came down to today you can buy a packet of gummy sweets for it. And I think that was actually a very good representation just of currency devaluation, or the decrease of purchasing power across the globe in every currency. I mean, it's not just the dollar.
Yeah. So I've actually got it out here. So in 1913, you would have been able to have bought 30 Hershey chocolate bars. In 1929, you would have been able to have bought 10 rolls of toilet paper. By 1933, you would have been able to buy 10 bottles of beer. And by 1944, you would have been able to buy 20 bottles of Coca-Cola. It then goes through to 53 to 54. In 71, you could have bought 17 oranges. And by 1987, you could have bought 2 boxes of crayons. Into the 90s, you were lucky if a dollar would buy you 4 grapefruits. And by the 2000s, 2 lemons. What's interesting is by 2020, you'd be lucky to buy a McDonald's coffee for a dollar. And currently in 2025, as you said, you can buy a packet of wine gums for it, or gummies.
Yeah, and I mean that's not isolated to the US. That's the
No,
scary part. This is global. This is happening in every single country. It's a simple matter of a decrease of purchasing power of fiat currencies, and it's always been that way. And it's very interesting to look at. I mean, we can attribute the price of gold rising somewhat to the strength or to the decrease of purchasing power of the US dollar, but if we look at the facts here, it's had a 59.5% increase year to date,
yeah.
and the decrease of the US dollar isn't anywhere close to actually explaining that. So it just tells you how much gold has actually strengthened, how much the price of gold has actually risen this year. If we bring it a bit closer to home, we look at South Africa, and on the 1st of January 2025, we were looking at 49,500 rands for an ounce of gold. And when I had to do a double take when I actually read it earlier, because it didn't seem possible or plausible to me actually. Because right now we're looking at 71,400 rands.
Yeah.
And that's an increase year to date of 44.2%, which also gives you that little bit that the rand has actually strengthened throughout the year. But it's funny to think that at the beginning of the year we were looking at 50,000 rands an ounce and going, oh wow, that's expensive. And now I'm looking at it and I'm going, was it really that cheap?
Yeah, and again, I think what's important, and especially for today's discussion, is we're now going to look at where's gold going. As we said, we honest enough or open enough or transparent enough to admit that we did our calls. I felt they were fairly bullish, and we got within the first 2 months it was overrun already. We reassessed again, as did other market commentators, and again the price overrun that also. And again, by mid-year we realized that we went into something very special, that what's happening right now is just such a special time. It also leads me to also bring in the Kindleberger and Minsky model of booms and busts, and how we in that phase of greater awareness. We've gone through the institutional investment phase. It's now going into the public phase, which has that ramp up where the prices generally would go parabolic. And that also speaks to this. It speaks to the fact that gold is being reclassified as a tier one asset. It speaks to all of those things that suddenly in your traditional investment funds and things like that, which would not even consider gold, are now saying we're allocating 5%, 10% of our portfolio to gold.
Yeah, and it's I mean, investors, big name investors, Warren Buffett, we like to call him out on it because he always said, oh, he wouldn't touch it.
Yeah.
And we already know that he's dabbled in silver. He bought over $1 billion worth of silver, and he made some great calls on that, and I'm sure he made an absolute fortune through it. But we're seeing more and more investors that are actually advocating for gold now, that have previously said, no, it's a non-yielding asset, we wouldn't touch it. It's silly to invest in it, saying, guys, maybe it's time to look at gold.
Yeah. And so that kind of leads us to where what we want to look at now. So the crystal ball's out. You got it in front of you there. So 2026, like I said to you, we literally just over 3 weeks to that period of time. So from the Willem Theron crystal ball, looking into the future of 2026, what do you see?
Well, let's give it a bit of a rub here, and of course, I mean, as we said, we look at forecast from major institutions, and according to that, we can sort of draw a conclusion as to what the average sort of um, calls are on that. And if we're looking at it, we're seeing sort of a top of $5,000 and leaning more towards 4,500, maybe 4,700. So if we look at Bank of America, they've called for $5,000 with an average of 4,400. JP Morgan, I think they went in a bit higher than previously. They went in at $5,055. Goldman Sachs 4,900 in December of 26. Deutsche Bank 4,450, trading between 3,950 and 4,950. It's a bit more of a bigger window. We've got the World Bank, they're always pessimistic. They're saying 3,575. Now, as I said, they're always pessimistic. I don't quite see it going back
I
down
would
to
actually
that.
love to understand the rationale behind that, considering where the price is currently, and they believe that it will pull back by 500 plus dollars an ounce. To me, that makes no sense based on the current conditions, the current situation that is leans heavily and in favor of gold being bullish and strong.
It is an interesting one because they are always very, very conservative. In fact, pessimistic about their forecasts. I mean, I think last year they also had a pretty pessimistic forecast, something like 2,200 or $2,100 when all the others were calling for 3,500. So it's a it's an interesting one. You know, we've got outliers on both sides. I mean, I didn't include any outliers in this particular one, um, but you know, we've got the outliers, and World Bank is always an outlier on the bottom end.
Yeah. What's interesting is some of those outliers, and I won't mention them directly, but you're looking at gold maximum of $5,150, $6,200, even up to $7,000 as a peak. Now, me personally, I believe that we will probably hit the 4,500 within the first quarter of 2026 quite easily. In fact, if you see where gold is currently sitting, is we're already breaking that 4.2 mark, and then 4.3 should come quite quickly. I think 4.5 will be probably that top resistance. There'll be pullbacks, profit taking, but as we saw this year, that those momentary periods of the pullback has been quite short-lived with a leveling out, a lateral move, and then just continue to go back up. So me personally, and I'm gonna love to hear this next year when we review, but I think probably first quarter about 4.5. I'd say that into the mid-year we could see it heading towards close to $5,000. I do think we're going to break $5,000 in 2026. Do I think we will sustain that? I do believe there should be some pulling back, and I do think we'll probably sit in the high 4,000s for most of next year. But I do see us testing that 5,000 mark, and it might even go up to about 5,200. But I do see it sitting towards this time next year, around about probably in the between 4.5 to about 4.7.
I agree. We probably will see it break 5,000 at some point next year. And I tend to go more with, we're going to look at about 4,600 as sort of more the type of median.
Yes.
I'll be the World Bank of this
No,
conversation
but
here.
again, I smile because when we do this, your projections are generally more conservative than mine, which is just how you are, you know. And who's to say you spot on and I could be the outlier and completely out of my mind, or vice versa. But what's interesting is you and I both go through the same data, have the same discussions, and even we are not on the same page as a final number, which where we believe it will go. I look at where the world is. I see the current economic conditions. I'm very worried about the U.S. economy. A thing came out now this week about U.S. jobs, and they're not in great shape. There's a lot of pressure on the U.S. The S&P 500 is seriously overvalued. It's a good barometer of the U.S. economy and the equity market. And for me, I am still, and I've said this for a lot of this year, is I do believe at some point there is some market correction, recession slash depression on the cards. Will it be in 2026? It is probable, but I do believe there's pressure there. I also then look at China. I see how China is starting to gain momentum and starting to build up to become the biggest economy on the planet. And they are pushing the US, and I do believe that the relationship in BRICS leans towards China still gaining that momentum and still getting that strength. I mean, I just look at the quality of, and we've had this in one of the podcasts where we spoke about Chinese vehicles, where you looked at them 10 years ago and they were laughable. They were cheap imports and they were not great. Suddenly now you see the quality of the vehicles. They have surpassed even the US and Europe in technology, in the features that these vehicles are coming out. The price points are far more competitive. Yes, the overall value for what you're actually getting is phenomenal. And then you even look at the top end of what they're selling in vehicles. And I don't even think the Europe and the States are anywhere near what they're actually producing right now.
Yeah, and it's interesting because I read an article the other day that there's now a big pushback from European vehicle manufacturers, because the deal was 2035, no more internal combustion engines, all electric, or no more new internal combustion engine vehicles may be sold. It's, all electric and everything. And I read an article where there's now a pushback from the European auto manufacturers that wants to relook at that. So, if something like that was set in China, it would have been set in stone by 2035, only electric, and you can almost guarantee that would happen. So, yeah, it's a. I think China's economy has been underestimated for a long, long time, and the moves that they've been making recently is pointing towards the fact that one day, relatively soon, we'll probably be talking about them as the world's biggest economy.
And I think that's far sooner than later. Another thing I saw, and I know we've diverted here a little bit, but what took the UK or Europe during the Industrial Revolution, it took 7 generations to get to a certain point. China has been able to achieve within 1 generation. That's scary. And that's an embracing of technology. That's an embracing of all those things. Like I said, 10 years ago, if you'd mentioned a Cherry or vehicle, or you'd mentioned Chinese vehicles, they would have been frowned upon. Suddenly, as I say, you see them coming into the market and they're just gaining traction because they are producing great vehicles.
It is interesting. I always think of that Top Gear episode that Jeremy Clarkson and James May went to China because, people were saying in 5 years you're all going to be driving Chinese vehicles. And they went to China to look at the vehicles. And it was, their take at that stage was they're making cars, not great, but they're making cars. And I remember you just mentioned Cherry, and what was it? It was probably about 10, 15 years ago. They came out with a QQ in South Africa, the Cherry QQ, and I remember looking at that and thinking to myself, what an utter crap box. Now, I'm looking at them and thinking that is an absolutely phenomenal car. So, yeah, it's we are diverging here.
But I think the point, what we're really highlighting here is China's emergence as the next dominant world power. And of course, it is this a constant tug of war with the US, and they, unfortunately, and we've been through this in many of the podcasts, where US has outsourced a lot of their industry. They're now saying, no, we want it back, and America first, and You get tariffs, you get tariffs, you get tariffs. Like Oprah would said, you get a gift and you get a gift. And Donald Trump's going out throwing tariffs at everybody. And some of them are sticked, and some countries are trying to look at other markets, other opportunities. But we understand why they're trying to do that. They're trying to stimulate a lot of that outsourcing that they did, where their whole automotive sector in Detroit, in that region, used to be the heartbeat of American and probably some of the world's automotive, and now is mere fraction of what it used to be.
Yeah, unfortunately, it capitalism. It's been a great driver behind the US economy. It's been probably the biggest reason why the US is so hugely successful. And it's unfortunately the reason why they are now in the situation that they are. If you're looking to save a few $100s here or there, and you can do that by outsourcing it to China, you're going to do that. And that has allowed China to develop the capacity, the capability,
The
the
technology.
technology, everything they need to be able to manufacture their own. And so yeah, it's a bit of a two-edged sword that they've been looking at there, and right now it's coming back to cut the other way.
Yeah. So I think just in closing, just let's review it. So 2026, we are looking at, as we said, it will be around the breaking for 4,300 into the mid four fives, and then probably, like I said, I do believe that 5,000 will be tested, and in fact, I think it will probably go to about 5,200, 300. But I think it will settle around in the high 4,000s.
Definitely. We also need to remember that 2025 isn't quite done. We've
No,
got the Christmas period coming up, and we do usually see a bit of a
it's scaling up. Yeah.
scaling up at the end of the year for the commodity prices. Especially, I mean, jewelry demand does play a factor in the gold price, and generally over the festive season, we do tend to see that playing a part in the gold price as well.
So just in closing, we did mention a number of market companies and commentators giving their forecasts. Um, is in your mind, and again, based on all the research that you do and what we see, and you said, yes, the World Bank is pessimistic and their forecasts are in the
3,500
3,500.
roundabout. I mean,
So, for anyone that's holding gold, and we know a lot of people that do and that have made some very good returns on it right now. Anyone that's holding it saying, but do we see it coming down? Or I want to get into the market. Are we at the peak now? Am I going to buy now and then it's going to drop to 3,500? What's your thoughts on that?
well, my thoughts on it is if you don't need to sell, then don't.
Yeah.
If you need to sell, then do sell that. I mean, from let's say you bought in January this year, you're looking at 1,860 rands profit over the what you would over the January spot price. That's quite significant. It's 44% increase over the past or over the year to date. If you don't need to sell it, then don't. I mean, why would you? What are you
Yeah.
going to do with the profits? Put it somewhere else? Well, sure, but um, basically be patient. That's the biggest piece of advice I will ever give anybody holding gold or silver or platinum. Be patient.
Yeah. Again, we do expect pullbacks, and it may drop to 3.5, but the natural movement, if we even review gold over the last 50 years, 100 years, it has always continued to move upward. So if you are in a position, hold it. If you're looking to come in, there's still plenty of growth to come. No time is a wrong time or bad time. But if you're looking to start to manage your wealth across different vehicles, gold is definitely something you need to consider. Yes, the rand is strong right now to the dollar, but realistically, that's not going to last forever either. And what even stuff I've been reading now is the expectation is the rand will start to devalue to the dollar in the next coming year.
Yeah, I think, well, it's going to sound horrible for me to say this, but never invest more than you can afford to lose.
Absolutely.
It's as simple as that. Never invest more than you can afford, point blank. If you've got some expendable income, maybe you cut back a little bit here and there just to make this money available. But, don't go out and put yourself in debt. Don't sell your house and pump all the money into Bitcoin. I mean, we saw people actually
I
do
know,
that.
no, I know people that did.
Yeah, and they lost out big time. Almost universally, going into debt, going and liquidating your assets to invest in something because you think it's going to be a get rich quick scheme or something. It's insanity. Don't do that. That's my advice.
If it's too good to be true,
It usually is.
it's too good to be true. In closing, Willem,
Well, I mean, as we said, we've seen a monstrous year for gold. Even if it drops back to 3,500, you'd still be up $1,000 per ounce from the beginning of the year. So, don't panic.
Yeah.
Hitchhiker's Guide to the Galaxy. Don't panic.
So next episode, we are going to look at both silver and platinum. And we're going to also just do that same summary where we look at the price for the last year. I mean, silver right now it has done so well this last week. I mean, last week we were looking at about $53 an ounce. It's currently sitting at 57, nearly $58 an ounce.
I think yesterday it was at 58,
Yeah,
over $58 an ounce.
absolutely. So we know that silver is just gaining that momentum. And again, it's interesting. I did say that once we broke that $50 mark, I did believe we'd start to see it ratcheting up. But we're going to leave that for next week. And I think I'm excited to get your thoughts on it. And then also platinum. I mean, it's had a very strong year compared to last year where it was really struggling. It's been impressive. It's been strong. And it's showing the strength of precious metals.
Definitely. I'm looking forward to next week. And if you're looking forward to next week, be sure to hit the subscribe button, leave a like if you enjoyed the video, and we will see you guys in the next one.
Take care. Bye-bye.